accumulation, manipulation, and then distribution. So what I did with this trade, if you can see it here, I got this set up in the 5 minutes. So you can see this. Those who remember, we studied about Quasimodo. Nani anakumbuka lesson ya Quasimodo? Quasimodo. Good. So something was happening here. This was in the morning, and there was this setup here that happened, and the Asian high was taken out. So I knew I'll be looking for sales that day. My target was the Asian low, so I waited for this to move. Let me see where I got this from. So I waited for it to move, and then it broke. Okay, it had broken structure already, so I knew I'll not be waiting for much. It broke another structure here, but I was not around the computer, so when I came back, the market was here. So I knew there will be a small pullback, and I used this. If you look at it at the 5 minutes, you will see there's a breaker block here. You remember we talked about breaker blocks. I saw a breaker block here, so what I did was to get my gun box. I used this to know where to do or where to put my stop loss. So I took the trade from the breaker block. It's supposed to be here, like that, from the base of the breaker block, and then my stop loss was at the 50%. If you check, you'll see that this was a 1.8 pip stop loss, and this is part of what we are going to learn, because I see people, with all due respect, and I respect everyone's strategy, you see someone taking a trade of a 1:2 or a 1:3. There's a higher possibility you will blow your account. The possibility is like 75% that you blow your account. I told you hatujenda sana, ndio tunaanza. I told you that there is a way you can be getting sniper entries, and you will not have to risk a lot. My mentor told me I should not take any trade that is less than a 1:6, actually a 1:10. So if you check all my trades, I hope you can see the risk to reward ratio. It is 11.22, and it's because I'm just conservative. I took this trade with a standard lot, so this is like $200 because I targeted 20 pips. That's mostly what I do. I usually target 20 pips, even though I knew this market will come here. That is why you can see I'm already on a trade here. If you can look at this, yeah, I'm already on a trade. So this is the trade I will wait for it to run overnight, because this is just a retest and it will come and buy from somewhere. Yeah, from somewhere, and especially from here. So I can hold my trade to there, but most of the times I wake up in the morning, the trade is still moving up, so I'll have time to just exit the trade. This is the highest of the week. You see this high here, anyway, that's where we are coming to. We want to do something we call top-down analysis. Top-down analysis. Top-down analysis. This is one of the most important thing we will do for Euro USD and GBP USD. So for those who are following on TikTok, it also becomes easier for them to follow along. It becomes easier for them to follow along. Yeah, so we'll do those two things. We will do Euro USD and we will also do GBP USD. So let me just take, so that I don't tamper with my analysis here, I'll just take another. Let's do order. Order is one of the best. Here we are. So top-down analysis, it's one of the most simple yet hardest things to do, but you cannot trade if you don't understand top-down analysis. Why? Because this is what will give you the bias for the whole week. So for me, I know what I'm expecting the whole of this week. So how do we top-down analysis? I'm an intraday trader, so mostly I start with the weekly. If you are a swing trader, you can start with the monthly, but all this, it's the same thing. It's the same thing completely. Same thing completely. Good. So if you look at this, this is the weekly. So this means every candlestick you see here has taken a week to form. That is 5 days. Okay, so that becomes easier for you to understand. So we need to look at what is happening in the weekly. What is happening in the weekly? So if you start from here, you can see that we were in an uptrend. The market was doing a series of higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. So this was inducement. Those who followed my class on inducement, this was inducement, and I'll show you why it was induced. Actually, I think, let me just finish with this right now so that I'll show you why it was inducement. Can you see this move here? Who can see that move? If you can see that move, kindly let me know. So we said the retracement, if you want to buy, you buy at the discounted price. If you want to sell, you sell at the premium price. Okay, I'm not sure what you want me to label. You can kindly text me so that I know. So if you can see this move here, we said what you do is to take a gun box and measure from the top to the bottom here. Can you see that? And so we want to buy at anything below this. All right, this is where we want to do a buy. Anything above that is liquidity. Anything above that is liquidity, and you will be taken out. I'm telling you, you will be taken out, because if you can look at this even broke structure here. It broke structure here like that. So a lot of people, a lot of traders will come and look to, because everyone can see this bulb here, order block. So you will come and do what? Let me show you how people are shown dust. Can you see that? Are we following? You can see that. So a lot of people will say this is a bulb, so they are looking at buying from this point. And what is their target? Because everyone can see that we're in an uptrend. So what's your target? That high. Okay, so stop loss, you can even do a few pips below the order block here. But what happened? This move did not emanate from a discounted price. So this is what we call an inducement. That move, it's an inducement. And what is it? Why is it an inducement? It is inducing buyers into thinking that we are now moving and this is a protected low. But what happened? The market came, when it got here, it bought from here. So everyone was thinking we will be buying from here, but it took out those guys and it continued to do what? To buy. So I hope you get that. Every time you see a move, ask yourself, if it's a buy, is it from a discounted price? If it's a sell, is it from a premium price? So I think we can now continue. So this is what was happening. The market came, took out the liquidity, and continued to buy all this up to here. So this is where I remember someone was asking, how do I differentiate between a BOS and a change of character? Ama church, hivyo ndio wanaitaga, So how do you differentiate between that? If you look at this one is a BOS. It's a break of market structure. But then if you look at this move from here to here, that move, this is the low, this is the high. When this is taken out, now that is a change of character. This one is now a change of character. Can you see that now? That is a change of character. So that is how you differentiate between a change of character and a BOS. Change of character and a BOS. So what this tells you is that the market structure have shifted, because if you look at this, the market never created a new higher high. Okay, so that means things have now changed. We are looking, or we've turned to bearish. So the market is bearish until this one is taken out. The market just took this liquidity here. If you can check here, you'll see the market took liquidity and then it is selling. So we now have started to sell. So that means this one here is a change of character. No, this is a BOS, sorry. This was the change of character. This now is a BOS. So we want this market to come. So what you do, you take a gun box and do something like that. So any sell that is happening below the equilibrium is a inducement. it's an inducement. Any sale that is happening below here, it's an inducement and it will be taken out. So we are only looking for sales above the equilibrium, or what we call the premium area, the premium price. So we need now to ask ourselves, where do we get the order block? Where do we get the order block? So we know the market up to this point, okay, up to that point. So we are waiting for this market to retrace so that we can take we are waiting for this market to retrace so that we can take a sell that will do what? That will take out this high, this low, sorry, because we are in a downtrend. We want to take a sell that will take out this low because we are in a downtrend. Now I want you to see something. I told you, if a market breaks structure, retraces, breaks structure again, this high, you see, this high that has been created is always liquidity. Are we together? This high that has been created is always liquidity, and this is how people are taken out. You will come and say, we have a supply zone here, and you can even mark the whole supply zone. And what will happen is that you take this supply zone, you take a short here. Where is the stop loss? Slightly above, and then you target the low without knowing that this is inducement, this is liquidity, and this liquidity must be taken out. So that means you are not looking at selling below this. So if you are looking for a POI or an order block, it must be above this liquidity. I hope we are getting, please. Are we getting the idea? Good. If you are looking for an order block, it must be above this liquidity. Okay, let me repeat that point. You can even write it down. If a market breaks structure, retraces, then breaks structure again, the high is always liquidity. Okay, if a market breaks structure, it retraces, then it breaks structure again, the high that has been created will always be liquidity. This is what I mean. This is what I mean. So what we are doing is that we are looking for a sell above the equilibrium. That is what we are doing. We are looking for a sell above the equilibrium. So why didn't we use this as our order block? Why didn't we use this as our order block? Because above this there is liquidity. So that means if we are looking for an order block, it must be above this swing high. Why? Because that swing high is liquidity. So we move from here and we come here. So we ask ourselves, is this a valid order block, or is this a valid supply zone? Now, so what we do, I've told you, this is what the market was doing. This is lower, lower low, lower high, lower low, lower high, lower low, lower high. And then after the market got here, remember we are in a downtrend now. After the market got here, it changed character here. So it broke structure here. Can you see this? It broke structure here, or what we call the BOS. It broke structure there. So the market broke structure, then it retraced and then did what? Broke structure again. What I'm saying is that this high that has been created is always liquidity, and that liquidity will and must be taken out before the ultimate sale happens. Okay, before the ultimate sale happens. So this high that has been created, this high here, this is always liquidity, and this high will be taken out. So that means if we cannot look for sales from this point and we target the lows, remember, someone will say this is a supply zone and they can get a few pips here. This was like 141 pips, but you see, this is the same concept we will go with in the lower time frames. So it is good to understand this from the higher time frame, and then once we get to the lower time frame, it will be easier to do what? It will be easier to understand. So that is liquidity. This other one is liquidity. This swing high here, this is liquidity. So we have to look for a POI that is above liquidity. You cannot look for a POI that is below liquidity. It must be above liquidity. So what do you do? Let me remove all this noise. So what do we do now? We look for the next POI. Now I told you this is my preference. I don't trade FVGs unless we don't have a valid POI. But can we see a POI here? Yes, we can see this order block here. So I want you to see how accurate this thing was. The kind of accuracy we got from this trade. The kind of accuracy we got from this trade. So the moment the market got there, the market did not have any other thing. And this is the sell that took out our previous low. Can you see this? That is the sell that came and took out that low. This low was broken from the sell that originated from here. The reason this low could not be broken from here is because what was here is liquidity. So I hope you've understood. Thumbs up if you get the idea. Perfect. Because this is the same thing we will use when we go to the lower time frame. So we've said that things have now changed. We are now in a downtrend. I want you to look at something else here. I want you to look at something else here, and this will really help you. Now if you look at this and run a gun box from here to here. So those who remember, I said last time that trades come from two you get a trade from a breaker block, and we also get a trade from the order block. So let's say we want to trade this now. Let's say this is what we want to trade. Remember, we are in a downtrend. So the market was coming lower low, lower high, lower low, lower high, lower low. All these are lower lows because we're in a downtrend. So this was the retracement. When we got here, we started trading downwards. So from what you know now, it tells you that this is future liquidity. Can you see that? That is future liquidity. And then those of you that remember when we talked about Quasimodo. This tells you that the main move will come from that area there, and that area is above what? It is above liquidity. That area is above liquidity. But now, because I want you to at least make money tomorrow. Well, this TikTok people, you can't see. Let me try to. So I think with that now you'll be able to see. You'll be able to see that. Okay, so we expect that this is where the ultimate move will come from, and this ultimate move is the move that we are expecting will break this low here. That low. That for this low to be broken, that move must come from here. It must come from here. So I was saying that after we broke structure downwards, now we are trying to look at the POI. Remember, we are in a weekly time frame, and we've said that the market is bearish. The market is bearish. So we are trying to look for a POI for this market. What happened is, can you see here there is something we call a BOS here, and then there is a breaker block here. All this area is a breaker block, and so this move came from this breaker block. The move that you are seeing here now, this move or this move, it came from this breaker block, but the main move should come from the Quasimodo level. Some people ndio naona wanaita head and shoulder. You see that one? That is where we are expecting that we will get the real move from. So after knowing that now in the oh my god, after understanding that in the time frame, the higher time frame, we know that we are bearish. Okay, we know that we are bearish. So now we want to know, how do we trade now? Let's come to the daily, and what we are doing to the daily is to get a trading range, a current trading range. We need to know where is the market currently. Where is the market currently, and what is our trading range? What is our trading range? Now, if you can look at this, you can see we have BOS here. Can you see that? We have a BOS there. So the market is still bearish. So we need to know what is our current trading rate now. So if you are writing, you can write this down. It is very important. If you are writing, where is this writing? After every break of, okay, let me just write it as BOS. After every break of market structure, a new trading range is formed. That is very important. After every break of market structure, a new trading range is formed. After every BOS, a new trading range is formed. What does that tell you? That right now we already have a trading range. And what is the trading range? The trading range we have is this one and this one. This is our trading range. Can you see that? I've used angry people so that you get angry and start making money. That's why I'm using angry to models there. So this is our trading range. Why? Because there was a break of market structure. Remember, we are in a daily now. We are in the daily now. So what do? Get a gun box, draw from the top to the bottom. And so this one tells you that what is happening here. Nani amakumbuka nimewambia I'm already on a trade. I'm already on a buy trade. Do you know why? Because I'm looking at this market coming to somewhere in the premium, get a POI and continue selling. And continue selling. But there is a way we confirm a trading range. We confirm a trading range. Confirm a trading range using a bearish and bullish quasi-model. Can you see that? That is how we confirm a trading range. So having marked this, you see this move is still happening, so I don't know whether it will come down. So we have to confirm this using no, the range is not the same as point of interest. Someone is asking. I'm coming now to point of interest, or what we call POI. So for us to understand, or for us to know whether this is a valid QM, we need to go to the lower time frame and confirm if we have a bearish and a bullish QM. How do we know that? We come to the 4 hours. We come to the 4 hours. We come to the 4 hours, to the 4 hours, to the 4 hours. So our BOS here still stands, but I think now we can try to make it a bit finer. So this was our previous lower low, and it was taken out here. Can you see that? A QM, by the way, a QM is where we have two things. One, a break of market structure and a stop hand. And what we call a stop hand is liquidity being swept. See that? It is liquidity being swept. The moment liquidity is swept and we have a BOS, then we have a QM, a quasi-model. This is Euro USD. Euro USD. Euro USD. So we've confirmed that we have a QM, and then if you want to understand, or if you want to see the QM, you remove all this noise by using the line chart. Can you see on your trading view there is a line chart here? There's a line chart here. So here it's very easy for you to see where the BOS is. That is where the BOS is, and this is where, this is where the stop hand is. Can you see that? That is what we call a QM. A QM. So we need to know whether we have the same down here. I want you to look at this. What is that? Stop hand. This was the previous high. Can you see this wick? This thing here? Okay, so that one we call it a what? A BOS. And then we can go back to our, and then if you can look at this, it was broken with a body. Can you see this? This body is above this one. That's how you confirm a BOS. No, that's why you confirm a Quasimodo. Okay, so we've confirmed that this market, we are still bearish. Please don't forget the overall structure of the market always, because the overall will always be respected. The overall, so the overall trend of the market is that we are bearish, but we are expecting that this market retraces to somewhere that is above the equilibrium, and then we expect the sell. Are you here? This is now a retracement. This is now a retracement. This is a retracement. So we need to come here and ask ourselves, where is the liquidity? Where do we have the liquidity? Where do we have the liquidity? So I want you to see this. This is the lower low, lower high, lower low, lower high, of the lower low, lower high. Then we came here. We came and created, this is almost like equal highs, and then lower high. Look at this. This is the one that broke structure. Can you see this? And then we came here. We came here. This was taken out by this one, and then we came here and came here. That means from where I sit, because you can mark this as a BOS. Okay, let me remove the noise. You can mark that as a BOS. So the only liquidity that has not been taken first is that one. Okay, who can see that, so that I'm not talking to myself? Who can see that? Perfect. So the liquidity, the first liquidity that, now remember, all this is trade line liquidity from here, all this, and it will be taken out at some point. But now we want to know where the market is currently and what is expecting, or what we are expecting. We want to know what we currently are expecting. What we are expecting. So that is the first liquidity we see. The first liquidity we see. Where is the second liquidity? We have this one. So this is liquidity. This is liquidity. Okay. Now both of them are at the premium price. So we need to ask ourselves, which liquidity will be taken out before we get the ultimate what? The ultimate sell, or before this market reverses. Now there are two things. There are two things here that are very important. One, I want you to look at this. Can you see this order block that has the liquidity? That one. Who can see that order block? Good, you can see it. So if you look at that order block, it was retested by this move. This is the move that retested that order block. Can you see that? Are you able to see that? This move here retested that order block. Now for us to get an ultimate sell, we need an order block that has not been retested. We need an order block that has not been retested. So you need to ask yourself, before all after this liquidity is being taken, where else can we see an order block? If you cannot see it clearly, you come to first you can go back to the daily and check. If there is none, go to 3 hours and check. Can you see anything? I'm not seeing nothing yet. The only thing I'm seeing is FVG. We come to 1 hour and check. What is here? I'm seeing something here, but let's see whether we get something better in 30 minutes. So I want you to look at this. I want you to look at this. We have another liquidity here. You see this swing high, that is liquidity. This swing high, that is liquidity. So we have two things. Number one, we have this breaker block here, you see, and we have an order block up there, this last buy before significant sell. Can you see that? Who is able to see that? We have this breaker block BB, and then we have an order block just before the liquidity. Just before the liquidity. Now we got this move for 4 hours. Can you see there is a gap here? I want you to see how these things works magic. Can you see that gap there? That gap was, I think, was it this week's or last week's gap? I think it was last week's gap, and it was not filled, and this gap will be filled eventually. It will be filled eventually. It will be filled. Now the only thing I don't know is when it will be filled, but at least you know that that is liquidity. You know that that is liquidity. So what I do, or what I can do in this scenario, where you have 2 points of interest, and actually it's 3, because this is another point of interest here. You see this one? Because it is above liquidity. It is above liquidity. And if you remember, we said something. If you remember, I think it was the daily time frame. Let me see whether I'll be able to get it. I'll remove this one. No, it was weekly. Good. So we said that the ultimate move will come from this person here, from here. Okay, that's where the ultimate sale will come from. So we have two scenarios here. A scenario where the market can come here and do the ultimate move, or the market can ignore this altogether. Because after I looked at GU and EU, this is EU, after I looked at it, most liquidity is resting down here. That's liquidity. This is liquidity. This swing low is liquidity. So a lot of liquidity is resting below than it is resting above. So my overall bias will be that this market will be selling. It will be selling. So what I'll do, I'll want to look for a POI just above the first liquidity. Just above the first liquidity. And you can see where we have liquidity, it's slightly where we have the BOS. And so for me, I'll wait for this market. I might not wait for it to come here, because this will be where is today's high? Today is Monday. Yeah, this is the highest high for today. You see that one? This is Monday high. So from where I sit, this is the highest high we are going to see this week. This is the highest high we are going to see this week, and that is why my take profit for the buy that I am in, I have taken it here. Okay, I have taken it here. This is top down analysis. You come from the top down trying to understand what is happening. This is EU Sony, this is EU Euro USD. So this is our weekly, or our most recent liquidity, because the market was running up, it was unable to break this high, so we came down, it retraced, and then we came down again. Remember, when the market breaks structure, retraces, breaks structure again, the high is always what? Liquidity. Never forget that. The high is always liquidity. And then this is what happens. It does not happen all the time, but happens close to 70% of the time. The direction that the market takes on Monday is the direction the market will take until Wednesday. And then Wednesday and Thursday, no, Wednesday, from Thursday and Friday, we can see a little bit of retracement. I sent a signal kwa group, not a signal per se, we don't do signals here. I sent a setup kwa group, and someone asked me, how did you know that this market is going to buy? It's not, I did not even do any analysis. I knew that Fridays, most of the times the market will retrace. And then I saw another block, and I knew that the market is going to go up. And it bought like, it was very it bought like 93 pips. 93 pips, and I was in that trade with a standard lot. So you can do the math with a standard lot. And actually I'll show you that market, because it is stopped exactly where my where the liquidity is. Here it is. This is the move. Do you remember this move? Who remembers? I sent this kwa group. This move, I sent it when it was starting. Exactly when it was starting. Let me show you something. Let me show you something here. I didn't know whether I got that liquidity in 1 hour or it was 15 minutes. Perfect. Perfect. Are you able to see this? So if the market breaks structure, retraces, breaks structure again, this high is always what? Liquidity. So when I took the trade, this trade, where was my take profit? Exactly where the liquidity is. I want you to see this. That was where the liquidity is. Look at where that market came. It came to exactly where the liquidity was. And then it has no business buying again, because market makers wameshiba. Those who don't know Swahili, I'm saying the market makers have taken you out, so they have no other business going up. So this is the same thing. So from where we are now, we were in the 3 hours time frame. From where we are now, the reason I'm actually buying this market right now, the only reason I'm buying this market is because I know, come back here. Yeah, it's because I know this market will probably take, and most probably it will take out that, take a POI around here. And as for me and my family, I will use that break a block there. Me and my family. So if you are my family, you can be looking at sales around this place. Okay. you can be looking at sales around that place. Where do you move to? And then I'll show you how to. This is 9 pips. That's a lot for me. Mimi trade zangu is very few pips. And then you can even target this one. That is 42 pips. 42 pips. And okay, we drew let's take a gun box and see whether this is above the equilibrium, because if it's not, you cannot take a trade below the equilibrium. Can you see that? This thing works like magic. I'm telling you, this is pure magic. No, it's not magic, it's it's understanding the market. Can you see where the inducement is, or where the liquidity is? The liquidity is just above the equilibrium. And do you know, there is someone, maybe at uko hapa, you've already said that this is what? This is a supply zone. You say, I am a trader now, I've gotten another block here. Another block. I want to tell you that you are liquidity as we speak. As we speak right now, you are liquidity. And you are the one that will give us money for tomorrow. For tomorrow. You are liquidity. Where you are starting is where we are coming. So, look at this. This is where the market is coming to. You will tell me tomorrow. This is where the market will come to, and then we will continue to sell. Because we've already seen the highs of this week. We've already seen the highs of this week. The Monday high. There is, well, things can have, I don't know. Do we have news tomorrow? Those who usually follow. Do we have news tomorrow? Anyone? Anyone with information? Let me check for you. Tomorrow is 14th. So we have news around 7:20, and those will be crazy news, by the way, the 7:20 and the 8 p.m. news, because that guy is speaking. What is his name? So that is crazy. Just make sure you are out of that place by 6:50. Who is saying you cannot see my screen? My God, you can't see my screen? Okay, if you can see my screen, show me with the thumbs up, please. Thumbs up, thumbs up, thumbs up. Perfect. Perfect, 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 perfect. So the guy that is speaking tomorrow will definitely take a lot of you home. You will blow your accounts tomorrow if you don't leave by 6. Leave by 6, so that by the time the people are waking up, you are already out of that place. So tomorrow you can see either something like this or something like this. A crazy move. That is what I want to mean. Tomorrow you'll see a crazy move at 7. So my advice is, if you can get out, of that trade tomorrow, it will definitely be of help to you. 7 p.m. and that's East Africa time. So 7 p.m. East Africa time. You can convert it to your time. 7 tomorrow East Africa time. So someone is asking, do we use the gun box on specific time frame or any time? Now, if you followed me, I started by using the gun box on the daily. And this is where we got our trading range. Can you see this trading range? These angry boys here. This is our trading range. So I use this to know, what are we supposed to be doing now? Are we supposed to be buying? Are we supposed to be selling? If we are in a discounted price, we are supposed to be buying. If we are in a premium price, we are supposed to be selling. So that was my first bias. That was my first bias. And then I came here and to try and understand where we are, where the market is currently. And this is where the market is. Like from morning till now, this is the move that has happened. Okay? That's the move that has happened. So I need to know this retracement that is happening here, where will it retrace to? So I use the gun box to know that I'm supposed to be buying. Usinunue sahi because me I bought from here. So if you buy right now, you can still do it. You can unaweza tafuta a POI and buy with me until about this price, where we have the inducement here, the liquidity. So tomorrow we are expecting this move to happen. You see this move? So this is the move we are expecting to happen. But as always, there's someone who had sent a setup kwa group. It was a gold setup. Sijui kama tuko naye huko, anaitwa Mr. Chege. Is Mr. Chege here? I can't see him. So I just looked at you are here. I just looked at that and I knew where he put his POI was inducement. Just looking at it. So that is how good you should be. Once you measure the trading range, you need to ask yourself first. The first thing you need to ask yourself is not where am I buying or selling from. The first thing you need to ask yourself is where are we being taken out from? The retail traders. The retail traders. Where are we being taken out from? The moment you know that, it will be easier for you to look for a POI above the liquidity. Because what happens, the moment the market takes out liquidity, it has no business being there completely. The moment it takes out liquidity, it just reverses to the and that is what I was showing you here. The moment liquidity was taken, immediately the market had no business there, and this was the liquidity. The moment it was taken, we didn't have any other business there. So it is that simple to understand that thing. So you only mark the trading range when you see those two things. One is what? Stop hunt. You see this one? This is called a stop hunt. Stop hunt. Ama a sweep of liquidity. Liquidity has been swept. So once you confirm this and then confirm something else, we call a what? A BOS. Confirm a BOS. And if it's possible, if you want to confirm a BOS, you can do it using the line chart, because a BOS must be with a body. Can you see? It closed with a body, so it's a clear BOS. So with that, you know that a new trading range has been formed. After every break of market structure, a new trading range has been formed. So that is how I came up with the or that's why I said that this is already our trading range. This one, this is our trading range. So what I'm waiting for is a retracement, and then I continue moving with the market. I continue moving with the market. I continue moving with the market. What I would advise is that, especially when you are starting, don't take these retracements. It's just my advice. Wait for this move, the sell move, because retracements can be crazy. Anything can happen at night when I'm sleeping, and then the market will do something like this. Anything can happen because we don't know what is happening when we are asleep and other countries are awake. So don't, if you can, avoid retracements. Once you understand that the market is bearish, only look for sales. Once you understand that the market is bullish, only look for buys. It will help you Sisi unajua tushazoea losses, hatuonai kama ni kitu. But if you don't have shock absorber, tutakuweka maji. So tomorrow we look out for this. Tomorrow we look out for this. And what I'm suspecting is, this market can reach here. Itapanda tu, but it can reach so that tutengeneze Asian ridge. Okay, do you remember Asian ridge? And then tomorrow it takes out the Asian ridge upwards, and then we have the main move. That is just my speculation. That is my speculation. But anything can happen, but that is my speculation. That is what I am speculating. And with that, I think we can call it a day. I think we can. Okay, this is how you set your gun box. You see here we have some settings here. So me, I love my gun box very clean. I love it very clean. Let me show you how it usually looks like. Initially, a gun box looks like this. Default. This is how a gun box looks. It looks very messy. Kitu kama hii itafanya pesa yote iende. I love my things very clean. Even my chart. You see? But the whole idea of the gun box is for you to see the midline, see the highs and the lows. So what you do is you come to the settings and remove all this noise. Okay, what is happening? The echo is gone now, I think. I hope so. Okay, that's good. This is EU USD JPY. USD JPY. So reduce all this noise and you see how it looks like, and then maybe it has background, maybe it has what, and remove all these things, because this is how it comes like. And I don't think all this is even necessary. Can you see any necessity with this? So you remove all this and you are only left with the highs, the lows and the 0.5. Can you see that? Very clean. Very clean. So can you hear me? Are you able to hear me now? Do I have echo? What? I wish I know what is happening. What about now? Okay. I don't know what was happening to my mic. The online people will tell me whether they are hearing me. I think they are. I'm actually almost done. I don't think I have a lot remaining. So we say that is how you make your gun box a little professional and clean, so that it becomes easier for you to do that. And that happens still with the fib. You see the fib retracement. So let me show you something else, and then we close. I know I'm a few minutes late. So you see, we've used the gun box to know that this is where we are supposed to sell from. So someone can ask me, isn't there a way I can know the at least a range? If you cannot, maybe if you are not able maybe to see the breaker block, or you are not still conservative with those things, you use the fib retracement, you see. And I think maybe probably one of these days we will learn on how to use the fib retracement. So you see what happens with the fib, or this range from 0.78 to 0.72, this is what we call optimal trade entry. Optimal trade entry. Optimal trade entry. Ama OTE. Optimal trade entry. Optimal, never forget this, trade entry. So from where we have 0.618 to where we have 0.786, all this is an optimal trade entry area. So what you can do is you don't have to maybe spot a breaker block or something. Wait for this market to come like this. Once it gets to your area, okay, this is either 5 minutes or 15 minutes, wait for it to do what? To change the character. And then where do you take the trade from? Retracement. And then you can move with it. Kama umelewa hiyo mkono juu. That is one of the most important things you can do. One of the most important things you can do. And what this does is that it gives you a higher risk to reward ratio, because once the market does this and it breaks structure here, you can now come, let me remove this, you can now come and get maybe a breaker block or something here, you see. So that will give you a very small stop loss. If you look at my trades, if you look at all my trades, the stop loss is something that is too small. This is 1.8. I think I've removed others. Let me see here. This is a 0.2. This is a 1.6 stop loss. Can you see this? That's a 1.6 stop loss. This is a 3.9 stop loss. This big move was 10 pips stop loss. And it's because it was so big and I was not I minted the money while asleep. What a good thing. This is supposed to be, I'm supposed to wait for this move later, so I'm still waiting for it. When you come here, it's the same thing. This is a 1 point, okay, you see what is happening for Geo, the same thing. So it helps you to get tight stop losses, and that is one of the what do we call it now? One of the edge when it comes to smart money concept. One of the edge when it comes to smart money concept is getting those tight stop losses. Anything below 10 is good. Anything below 10 is perfectly good. Perfectly good. And with those few remarks, I think we can call it a day, unless someone has a question. Unless someone has a question. So I have an announcement to make. A lot of people, both from the community and online, are asking me if we can do trades together. If you can look at this, okay, let me see. Trading replay. Okay, can we do this tomorrow maybe? Because it's already very late. But maybe you can give me a few minutes. I'll show you that. If you look at this, these are the trades or the setups I've sent in the group. And I'm not 100% profitable. I don't think there is anyone who is 100% profitable. I don't think so. There is anyone. But I have come up with a plan to try and see whether we can make some money together. And because we are different people here. Some are serious, some are not serious. If you check our group, we have about more than 100 people, and only is it 20? We are 20 here. Only 20 join our classes. So I want to filter the noise and get at least 10 very serious people. I already have 3. So I'm now looking for only 7. I'm only looking for only 7 people that we will trade together between now and end of November. Between now and end of November. And we are not just trading. What we do is I'll buy a Proform account for you. I'll do it. Imagine, that is how generous I am. But this is what happens. I buy a Proform account for you to start, so that you don't invest money and then lose that money. So once I get a 5,000 Proform account, you trade. If you pass the evaluation, you can now buy that account to be yours. And a 5,000 account is about I think it's, how many dollars are that? I think around $40-50. And you only buy when you pass the evaluation. And we will be doing 2 evaluations. The first evaluation is 6%, so you are supposed to make $600. And then the second evaluation is about, I think, $400. Once you pass, because I'm not doing it from my own computer, I'll just guide you. You do it from, so that usipass account halafu ni ipotee. So you'll be doing it in your own. Mine is to just, that is why I don't want a lot of people. I want very few people that I can guide every day. And so so that also I filter the noise, I filter the unserious people. I'm charging you a very small facilitation fee. If you know trading and you know how much people are charging, $59 is just like a drop in the ocean. And then within October, November and December, my goal is that you will cash out your first money on December. So hautaenda nyumbani kama umesota, utaenda ushago kama umesota. You'll have money to hire a black jeep and then tell your people that it is working. It is a good thing. I'm thinking about you. Kabisa. Thinking about you. So my goal is that when we get to December, at least every one of us, and I'm telling you, if you'll not have made money, I'll send you $100. And I'm a pastor, so I'm not here to lie to you. Yeah, I'm not here to lie to you or to just do some nonsense. No, I'm a serious guy. I mean business. So I'll make sure that at least the people that we will have, we will, even if you will withdraw $50, or $100 or $200, I'll make sure that before we break for Christmas, you have money, and not just money, it is trading money, so that when we come back here on we come back here in January, now we are coming now to do some boss moves in January. So it doesn't matter whether you've started trading today or you have traded for how long. I'll make sure that I'm not going to send you signals, but I'm going to give you very simple steps, and make sure that even if a day you get 10 pips and you trade with maybe a 0.5, how much do you have? That is $50, if I'm not wrong, in a day. So that is my plan. And then after that, we can we can now move to maybe $10,000, $25,000, $100,000, and that will make you start getting confident in the market. If the only thing you do is to use the demo accounts, once you get to the market, emotions are very high. I'm telling you, emotions are they are crazily high. And so that I think that is the best way I can give back to the many people that have been asking me, how do we start making money? Oh, I need this, or I need that, all those things. This will be a good move. I'm not looking at having a lot of people. I'm looking at having a very small community, and I'm also hoping that I'll get my mentor to come and one day speak to this community, so that you also know that I also have someone whom I look up to, and they guide me. If I make $200, maybe my mentor is making $1,000 a day. These things are happening, but it's a small community. It's a small community. So if you'd like to be part of this community, you just DM me, and then you just invest $59, so that it also helps me to sieve some unserious people, and we get going. Those who are following us on TikTok, you can, because I'll continue doing free classes. Yeah, I'll continue doing free classes. I'll continue kabisa. I'll continue until all of us get somewhere. But I need people, a few people that can start making it in trading at least, so that you don't just waste your time. And then I'll give you personalized teachings. I will recommend books for you and send you the books, all those things, and make sure that by December you have something. You have something by December. You don't go to the village the way you came, or the way you went to the city. So with that being said, we said we need to do so this is how you do back testing. This is how you do back testing. This will just take a few minutes. How you do back testing is not by replaying. I know a lot of people make that mistake. It is not by replaying. The best way to do back testing is to go back for like your trading view. It can go up to maybe 3 months or something, if I'm not wrong, and then identify the what is it called, the strategy you want to backtest. For example, let's say we are backtesting the AMD on the Asian range. Do you remember the Asian range? We said you draw from 2 to 9, 2 to 9 like that, and then you do something like that. So you want to ask yourself, if the high was taken out, was the low taken out? and then draw all of them every day for like 3 weeks. Actually, this is what will give you the win rate for our strategy for like 3 weeks. And then make sure you are journaling what is happening. For example, this was Friday, September. Was our strategy respected? No. Why? Okay, let me see what happened. So really share up before I say no. Yeah. So if you look at this, if you look at Friday, and it happens a lot on Fridays, so I'm not surprised. If you look at Friday, the highs were taken, but the lows were not taken. So if you do this for like 3 weeks, 3 weeks, and then week 1 you are journaling on Monday, was it respected? Yes. At what time? This time. When was the highs taken? This time. When was the lows taken? This time. Tuesday. Was it taken? Yes or no? You do all those things from, actually this is the homework I'm giving you. If you don't do this, you don't join my next class. You don't, because this is the only way you'll be able to get what we really are saying. So go to the trading view, backtest from today. This is the Asian range. I do what I teach myself. This is the Asian range to where is 9 to 9. You see, the highs were taken. What was I looking for? To sell. I was looking to sell. So go and do that. That is today. Look for the one for yesterday, blah 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 blah, like this. And then the last 3 weeks, you add the sessions manually. For example, this is yesterday. This is yesterday. Friday, sorry. This is Friday. Friday, I look for 2 to 9. 2 to 9. And then I told you this is East African time. So you can just convert this to your time. Just convert it to your time. You see, that was this was Friday. Okay, what I'll tell you is that Fridays, this one will not be respected. Hiyo nayo nishaingia kwa akili. Because and I'll show you how to trade on Fridays. Every Friday, that one I'll show you for free. Every Friday I'll show you, because most Fridays are for retracements and pullbacks and trying to mitigate all those things. So what you do, you go and journal. This is my advice. If you can do it on paper, the better. On a book, I have 3 trading books. 3 trading books. So one is for backtesting, another one is for journaling my trades. So once we start getting to serious things, we also need to get serious. Get a book, journal. First week, this is what happened. Second week, this is what happened. Third week, this is what happened. I have something here I've written, and my time is up actually. So right now, these are add-ons. So you are not held. If you have something you are doing, you can now bid us goodbye. But I want to show you something here. I want to show you something here. Okay, where are we? We are here. So if you look at these, these are some of the back testings I do. Can you look at this? Okay, oh my god, okay, but I'm not supposed to be showing, I'm supposed to be showing you this. Just a second, I'm showing the wrong thing. Perfect, you can see it now. So if you look at this, these are some of the things I've been researching. So if Thursday is higher than Friday, then what does the following month look like? All these things. And I answer myself these questions. Monday makes the high, blah 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 blah, and the percentages. You see, that is why even without doing a lot of analysis, I get to the market and I see a setup. Very easy, very easy. Can you see this? You can do something like this, but for now, go and backtest. Mostly backtest the Asian range, because that is one of the most easiest way to trade.